day all. Ira Epstein with your metals market wrap-up. And this wrap-up is for Tuesday, the 11th of February, 2020, just around the 2:30 time frame. So where are we right now in these markets? Well, you know, yesterday I told you Tuesday reversals. If you don't believe me, go to the update. You'll see in the afternoon. The markets that were eluding it for a long time this morning were the stock indices. The metals did not elude it. I find it interesting that copper has come alive. It's acting like a market that wants to pop. You're getting a little bit of a pop in the energies. They're not declining, might be the best word to say there. Bonds and notes had a reversal where they are breaking down. So we're getting something of that. Now, how the markets close isn't as important as intraday, what the momentum is, and that's what a Tuesday reversal is. It's not looking necessarily that markets that close on an upside on a Monday don't have to not close higher on Tuesday, but it's what they do intraday, and it's the momentum that you're looking for. And now we're getting at least that late day momentum in stock indices. But it certainly doesn't act like a market that all of a sudden has decided to roll over. We had Fed Chair Powell speak today. He's talking of 3% wage growth and inflation in the U.S. running 1.6 to 1.8. He did talk about our first quarter GDP taking a hit because of the coronavirus, as other countries will, and he sounded fairly dovish. So I think the market thinks he has their back. When we look at gold, we can see for the week we're down about $2. We haven't done any real damage on the chart, but we have backed away from the high close, which was 1582.90 to the current, sitting here at 1566.60. Sounds like we've fallen a lot, but it's only $16. When you take a look at this chart action, I'm going to keep coming back here and remind you of Missile Day. By the way, the Iraqi missiles, at first we thought there were just a few soldiers, then it went up to 50. Today they're saying 100 soldiers were hurt by the concussion of those missiles. So if you think there was just a simple, hey, they fired the missiles, didn't hurt our troops, that is not true. Market has stayed, though, within this whole range of the peak of that day down to the correction low, and it's what I'm saying, chopping people up in between as they're looking for direction. Now, for the first time in a while, the market has confirmed lower highs and lower lows. Hasn't done that in a little bit. It had done it here, and then it quickly lost that pattern. Where's the 18-day average of closes? Right here. Where are we fighting a battle? I think you can see it. At 1570.270 is that number. We're at 1571.90 now. So that's your battleground. I'm going to repeat again. Now with this pattern, if you fall down, I'll show you where a possible objective is, the lower Bollinger Band at 1550.330. What knocks out the bear trend? If the market gets up to 1580.50, you knock out the bear trend, and then you put into play the 1592 level. So you're swinging from day to day. Who's taking control of the market? The last moves were easy to the upside. You haven't hit a lower Bollinger Band in a while. So that just gives me an idea that the short side hasn't been rewarding all that much as the long side has. That's the point that I'm making. When we come to momentum, you're getting no edge. It's flat. So you have the bias down, the trend down. That's both bearish. If the market continues breaking, looking for 1553 as a possibility of a support zone. I think if you get over 1580.50 and knock out the bear trend, you put in a short-term bull trend, and maybe the resistance is the upper Bollinger Band. As we look at the April gold versus the March silver, I've changed the months now, you can see it's still climbing in favor of gold. What does that mean? Each number here is an ounce of silver in a perfect world, no commissions or anything. You put your silver in your shopping cart, you go down the street, you push it to a store, you say, hey, I'll give you 89.15 ounces of, or 14 now, ounces of silver, give me an ounce of gold. So the higher it goes, the more silver you need, which means silver loses value against the gold. In the silver chart, the 100-day average of closes has been supportive of this market. If it gives ground here, and it can, the trend is down, the bias is down now, and the market is trading literally at that number, 1562.60, 1762.50 is the 100-day average. We're literally right on it. If the market gets under that and wants to pursue lower value, then the lower Bollinger Band's the next target. Unlike gold, even if you pop through 1782.50, you cannot get the pattern of a higher low, higher high. So the bears are the ones that have control of this market. In the copper market, we've lost downside momentum. Yesterday I told you, you're so close to losing it, you got to watch on the opening if this market gives you a pop, which it did, and you lost the bearish embedded reading. Now you can get that back tomorrow, but I'd be very surprised if those bears, after a big break like this, aren't stepping out of the market. That doesn't mean I'm right on what I'm saying. I'm just telling you what I'm looking at as a chartist. I do see resistance from 262.95 up to 268.50. And if the market breaks back under 254, I see a resumption of the downtrend. But right here, I think the edge, if you're a momentum trader, they've stepped out of the market. In the platinum market, we're getting a pattern suddenly that could be higher lows and a higher high. Well, I've got this here. I don't know where the settlement when I came in here quite was. So you have some divergence. You got the swing line up, you got bias down, and you're oversold. In the palladium market, I keep looking for an edge in this market. Why? If they're going to have the auto factories back to work in China, eventually they're going to need the palladium. So I'm watching as this market's just marching back and forth. Don't get me wrong, they probably have some stored there, but we know it's a good catalytic converter. If the market gets over 2278.70, I think the bulls grab control. Right now, who's in control? We have lower highs, lower lows. That's a downtrend. But when you're at 2266, you're over the 18-day average, so you nullify that. Momentum has gone flat. I'd be careful if I were trying to be bearish here. If you get over 2278.70, then the question is, can the bulls keep the market from slipping back under this low? And if they can, maybe we're back up into challenging that upper number. What do you have to do to be bearish? Get back and close under the 18-day average of closes. Last, in the dollar index, we had a period of days where the market day 1, 2, 3, and this day, 4 days in a row over the upper Bollinger Band. I told you to go and count how many times you get 5 or more. And if you did your homework, you saw that the odds aren't strong. So this pullback isn't a change of trend by any stretch. It's a market that has now moved back in line with itself. And again, you still have a trend up. You have the swing line locked bullish. You have the slow stochastics embedded. When the red line closes under 80, I think the dollar will have said it got too high and it's ready to correct a bit. Until that momentum's lost, I think the pros are still going to be buyers on breaks, but I do not think they're buying over the upper Bollinger Band. We talk about this, a lot of the fundamentals of the trade, in our reports here at Linn. And we've got a whole staff that writes on many different reports. For those of you that follow what I've written, if you've had my free trials, you know I really focus in big time on the metal markets, the currency markets, interest rates, and the financials. I love those markets. And I like them because they're so world scale, and you have to watch what goes on from one country to the other. But we cover all this with daily reports, even on the weekend for you. Yeah, even on the weekend. We have staffs putting them out. Remember, the market's open Sunday night. You need an edge or to understand if something happened, what is the mental edge? That doesn't mean you get a trading edge, because you don't. Knowledge is your edge. So we try to give you the knowledge that we're seeing from the fundamentals and then help you to make your decisions as you want to go. How do you get this info? Go to our website, sign up for our free offers. You'll see a whole list of them. You can always call my staff. They'll be happy to help you, or you can click up here. I'm Ira Epstein. You have a good day, and I'll see you tomorrow.